Perfect. So today we're talking about cryptocurrency markets and the boom that it's had in the last couple of days. Just a broad overview before we get into the details. The cryptocurrency market is almost $3.86 trillion, out of which almost $2 trillion tied up in Bitcoin, and then a majority of it is tied up in the top crypto coins following Bitcoin. If we just look at Bitcoin, it's trading just under 100,000, but it's touched 100,000 in the last 24 hours or so. If you look at the 1 month chart, it's just soaring from 76 all the way to $100,000. If we compare it to Ethereum, though, slightly different perspective here. Like Ethereum's been on a downtrend ever since. It's just trading at around 80,000 dollars. But yeah, there's a huge contrast between Bitcoin and Ethereum. But that being said, there's been this whole crypto boom in the last couple of days, and a lot of it has to do with the presidential elections. Um, uh, like Trump coming into power has been one of the biggest boosts for the crypto markets. It also began kind of during the whole campaign process because crypto corporations have put around $119 million into the elections. We're speaking around, this article was published on the 5th of November this year. And up until then, the crypto corporations had put $119 million. And these companies are the biggest corporate donors, and they account for almost 50% of all corporate money coming from crypto bankers. I mean, if 50% of all donations from corporates are coming from cryptos, I expect something big to happen once Trump actually comes into power. And Trump is actually quite pro crypto. We all know that he was not always like this. He used to think cryptocurrencies seem like a scam. But now he'll turn the United States into the crypto capital of the planet and make it into a Bitcoin superpower. That kind of aligns well with his whole idea of making America great again, where he brings back manufacturing and, in this case, mining and operations of the crypto industry back to the US. This was actually a very big problem because of the current SEC chair, Gary Gensler, who was really not pro crypto. And in his administration, the SEC actually had quite a few charges and allegations on crypto exchanges like Coinbase, where they fined Coinbase around $4 billion for their operating as an unregistered, security exchange. And also, like, overall in 2023, the crypto firms were fined around $6 billion for loose financial controls. This also goes back to the regulatory authorities and how well they enforce these rules. With Trump, the wheels are already in motion. He's kind of nominated the next SEC boss. That's Paul Atkins. Paul Atkins is quite pro crypto. And then he's gone on various podcasts advocating for it. This is the guy here. And a lot of the crypto companies in 2023 were actually looking to go outside the US, just because they didn't want to kind of stifle their innovative ideas, just because they can't operate well in the US, and all these regulatory authorities cracking down on them didn't help them so much. So there were plans of kind of shifting Coinbase operations to the European countries and to Asia, but it looks like with this kind of appointment of Paul Atkins, the crypto markets are kind of looking good. There's also this kind of idea that after institutions come nations. So you see a lot of sovereign adoption, and that should be the next phase of Bitcoin evolution. So you see the BRICS adopting Bitcoin. BRICS had a conference in Russia. There's 6 new members. So their GDP is greater than the combined GDP of the G7. And out of these 6 members, 3 of them, Argentina, UAE, and Ethiopia, are mining Bitcoin with government resources. This is something that's been kind of becoming the norm now. A lot of smaller countries are actually looking to kind of capitalize on this boom and get into the crypto markets. Two very prominent players in this space are El Salvador and Bhutan. El Salvador's president Nayib Bukele has been an advocate of Bitcoin and cryptocurrencies in general. They have somewhere around, I think 750 is the number. This is kind of outdated around 15th November, but around $750 million tied up in Bitcoin. And then with Bhutan, that number's already crossed $1 billion. They hold around 12,500 Bitcoins, and all of it is, some of it is bought, but most of it is kind of mined through, utilizing government resources. So exciting times for Bitcoin. But when it comes to fundamental analysis, there's very little that I feel you can do with respect to fundamental analysis. Obviously, because there is this idea that with regular stocks or other financial instruments, there's always some tangible business that it can be linked to. So, for example, if I'm looking at Tesla, I know that every quarter Tesla will have their business operations. We can compare it to the past, quarters and decide on, how the markets, how Tesla is doing as a company. With cryptocurrencies, that's not the case, because cryptocurrencies are generally linked, and their main drivers are demand and supply. Other than that, they don't have a tangible, kind of product to sell or objectives to achieve. Obviously, adoption is one big thing that plays into the dynamics of how the price moves. I read a really interesting comment on Reddit, and if I can share here. Give me 1 second. So if you just look at this Reddit comment, it's really resonates with my view on it. So cryptocurrency has no key fundamentals. It's based purely on speculative confidence. It has yet to have any real store of value, like gold or other hard assets. It's a currency tied to nothing but people's confidence in it and want for liquidity. Once liquidity becomes scarce, it will have nothing to hold it, and you'll have better chances of trading it from a technical standpoint, which we'll get into it a bit later, but then trying to figure out the fundamentals of it. And then a reply. You can do fundamental analysis on assets like stocks because these are real companies with real people and real services, but cryptocurrency is linked to nothingness, just zeros and ones invented by people. Although I feel like cryptocurrencies, the general technology behind it, the blockchain technology has a lot of uses. I feel a lot of the investors right now are just flocking to the cryptocurrency markets just because of the fear of missing out, the FOMO of it. And around 90% of it, I feel like don't even know, what the use of Solana or what the use of Ethereum is. And that's very scary in terms of, long-term investing. Obviously, over the years, there have been issues that have been corrected by these, coins. There have been issues that pop up, regulatory issues which have been addressed. They go back up, the price goes up again, it goes down. There's a lot of volatility involved. But overall, the market's not matured enough in terms of investors flocking to these coins for me to have confidence that, okay, let me invest my money in it from a long-term point of view. But obviously, because as we see the cryptocurrencies are less about the fundamentals, more about the technicals. So Moise, if you can go over some of the coins that you have on your list, and let's talk about them.
Okay, perfect. There's one thing I also want to highlight. Although it's some form of store of value to some extent, there's speculative demand behind it. I think one of the key things that, in my experience, I have found with crypto in general is accessibility, right? So there's two ways you can buy Bitcoin. You either buy actual Bitcoin, which requires a little bit of a specific protocol and process to acquire it. You have to go to the right source. Or you're buying basically like secondhand Bitcoin, not really Bitcoin, but companies that also hold Bitcoin themselves, and you're buying a share of it or in amounts. And I think that back in the day when, I don't know if you're familiar with the whole NFT thing that was happening, that whole pump and dump schemes that were happening with these NFTs. I think the concern was around, how do you not mess up so you lose your money, like you lose your crypto, you accidentally send it to the wrong address, you end up paying too much what they call gas fees or transactional fees to process the transactions. And sometimes people didn't even know like that they were paying these high amount of fees, and they would basically eat up all their their crypto. Or not to mention, they have these wallets where people can access their wallets, but they have to take it off the exchange, put it in a wallet, they forget their security code. So accessibility was one thing that I found that I'm like, if this is hard to do, there's still a place for banks and institutions and regulation. And if there isn't regulation, how would I feel knowing that I don't fully understand how to utilize the technology? And like you mentioned in your conversation, it's like,
I mean,
what are the differences between the different cryptos, right?
Yeah, and the whole point of cryptocurrencies is to move away from regulation, not bring in more regulation. And that's the idea of having a decentralized currency in the first place. But if it's not possible within the realms of, and within the kind of reach of, okay, let's stay away from regulation because it is decentralized and there's benefits to it that we can reap. The involvement of regulators and other market players like the government in this case could actually hamper the growth of a potential technology that could change the way we live. It might get delayed. Obviously, I don't think cryptocurrencies are going to be over anytime soon, but the level of innovation at which it should have kind of reached by now, it won't, because of regulations and governments trying to stifle the innovation through all these kind of because even the people at the helm of making these decisions and these regulators do not understand cryptocurrencies. It's a very funny thing if you pull up videos of senators kind of questioning people on technology. You wouldn't really believe those are the people actually making the decisions, right? And yeah, it's just weird. There's one kind of benefit to it that I see from an investing point of view, is that it's portable. So, for example, if I hold shares of, I don't know, Tesla, it's very difficult for me, if I say move back to my home country, to transfer those shares over to my account and then do all that kind of stuff. That's got to do a lot with geographical limitations that we have, and institutions not working with us to kind of ease out the transactions. But with cryptocurrencies, that's actually very easy. So I can hold crypto anywhere in the world, in however small amounts that I want. I can have 0.00001 Bitcoin, but I can't do that with shares. So, I mean, from an investing point of view, it's got these benefits, but the long term, kind of view of mine is that do not invest in anything that you don't understand, and that's been the investing principle of a lot of these big, long term growth investors. Do not invest in something that you do not understand. And for me, I understand it a bit, but I don't understand it to the fullest. And for that reason, I don't think, investing in Bitcoin is the right way to go for me right now. Not one for sure. If I have to invest, I would rather invest it as a ETF or a basket of multiple, kind of crypto coins, just because that kind of spreads out the speculative risk. Main kind of risk in this case is speculative, and speculations with respect to Ethereum, Solana. I mean, you could go into those shit coins, Dogecoin, for example. Like, I've had such a bad experience with Dogecoin. I actually lost a lot of money. If you remember, back in the day, Elon Musk was supposed to be on SNL, and all the people were hyping that, oh, there's going to be this big announcement that Dogecoin is going to be a payment method for buying the Cybertruck and all that kind of stuff. And I actually invested a good amount of money into Dogecoin just a night before the SNL episode, and I think lost half of it. The price just tanked after it because I don't fully understand the tokenomics or the economics behind the token. I understand how demand and supply works, but I don't understand the fundamentals of it. As compared to if I have to invest money in a Tesla, it's very easy for me to understand the fundamentals of Tesla. If you understand the fundamentals of the automobile industry, you understand a bit about Tesla. But with cryptos, it's slightly different, and for that reason, I'm still on the edge, trying to see when's the right time.
Yeah, for sure. That's painful, but I mean, it's important to address the fact that aside from the narratives behind each of these coins and like what's their utility, I think it's really important then to focus on what you see on the charts and the technicals, because if it is a store of value to some extent, if there's demand for it, there's limited liquidity for Bitcoin. Eventually, it has a limited cap on how many Bitcoins will exist. And if people perceive it as valuable, then yes, you could argue that, okay, it's still fundamentally not giving enough information to make an informed decision. But if you understand technicals and you can understand how price action is, then if you play that game with it, and this is what I would personally do, is understand that, okay, what price points am I getting in? When do I not get into certain cryptos? Which cryptos do I like based on their price, based on how much people are discussing it? Is it going to be easy for me to access? So yeah, the technicals become more important, but we can go over that as well. Let's go here on the screen. Okay, so the first chart we're seeing here is the daily for Bitcoin against the USD. So this is a USD amount. This is what you're hearing on the news. When it got above 100,000 US dollars, it peaked here, according to my chart, around $1,004. $104,000, 174. But overall, the main thing is when I'm looking at the technical side, which is what I focus on entirely, to ensure that I'm making an objective decision. I particularly am not too savvy on the fundamental side, whether it's stocks, ETFs, commodities, foreign exchange. But the charts really help me participate in the markets. So when I look automatically at Bitcoin right off the bat, there's no volume. And typically volume is what you see on stocks and ETFs. Commodities, you see it as well. But we're not able to see how price is getting to its level. But without volume, we can still get a great picture that, okay, it's trending up since the September 2024. It had a low of about 52,000 US dollars. And it's been trending as it's starting to hold these critical levels. And I would use it with a combination of the candlestick charts, which you see here in the green and the pink. This is not by intention. It just so happens to show up this way on the charting platform. The EMAs, I have the 20 EMA and the 50 EMA and the 200 moving average. I still use these across the board for any type of investment. If I'm looking to put my money in this, I'm looking at two things. The first thing I'm seeing is, based on how far of a timeline I want to reference, has it been trending upwards? And the answer is obviously yes. If we were not to see this side right here, when things really started picking up, it's still starting to trend a little bit higher. It's making higher lows. It's reclaiming certain moving averages. And when I say reclaiming, it's making its way above and starting to hold these levels. And from a technical standpoint, this level right here, which is like around 75,000, is a critical level for a couple of reasons. It's a whole number. People like fives and tens and hundreds and even numbers. And the other thing is it's been pulling back at this level right here. So in technical analysis, you can say this is a bull flag. This is setting up some sort of breakout. And we're starting to see the price action around this time, which is technically November 2024. So just about a month ago, just over a month ago. So when we're looking at Bitcoin specifically, it is the benchmark in terms of the crypto market. It's like our compass. It's our thermometer to see what's been happening, what's going on with crypto. And one of the key things is, in addition to seeing if it's trending higher, it's, are you able to get a good price? And are you able to enter the market purchasing Bitcoin or other coins or other cryptocurrency without the feeling that you're buying it purely because you're afraid you're going to miss out on a move, or you're afraid that, it's hit all-time highs and it's concerning. So right now, for example, and I'll sort of explain this before I go back to originally why it might be a decent idea around November to buy it. If we look at it right now, a lot of folks have been talking about Bitcoin. It's all over the news. You're hearing about adoption on a national level for a lot of countries. Countries already bought Bitcoin. They've been mining Bitcoin. But overall, the critical news was, it finally made 100,000, right? That's a sign for you to not buy. That's a sign for me to not buy specifically, simply because if I'm looking at all-time highs, it either has to be consolidating at a level for a specific amount of time before I'm looking to buy. But if it just broke all-time high, and this was the first candle to penetrate this level, you always have to consider the downside first. Is there a likelihood that it's going to pull back? Maybe. Is there a likelihood that it's going to go higher? Maybe. But I'm more focused on the downside, because if I end up buying around 100,000, 104,000, and it immediately pulls back, which it kind of did, right? Like, there are folks that were waiting for 100,000 that may have bought all the way down here around 70,000. And if you look at this chart, the chart on this candle, on the 5th of December, 2024, the volatility was quite heavy. It went from 104,000, give or take, all the way down to 90,000. That's about $10,000 to $12,000 of value just lost right there in one day. So this is profit taking, right? And this is where others have a right to take profits, because they may have gone in really early. They may have even gone in around 80,000. But as soon as you're breaking a critical level like 100,000, you want to be careful and maybe not look at buying yet. Maybe wait for another correction about 10 to 20%. Maybe wait a little bit longer so it starts to make its way a little bit higher, maybe up to 120, and then it comes back and retests the 100,000 level. Then that retest level, if it's holding around 100,000, it might be a good idea to now buy, because you're more likely to get an upside move versus a downside move. And the most common phrase that I have adopted personally, and that's been helping me in trading any type of instrument, is if you're looking to enter the market, if you're comfortable with the downside first, the pullback first, if I'm comfortable with it going to 80,000, then okay, I can take the trade. But if I'm not comfortable for like a 10 to 20% pullback, I've purchased it at the wrong price. That's as simple as it gets. For example, if we go back to around November 2024, 70,000 was the price that it peaked at. You could have bought it just like you bought it. Many folks bought it around 100,000 plus, but it pulled back. Now, I'm sure the people that bought it around 100,000 in that one day, they were probably sweating, going, "Oh no, it's down to 90,000. Did I make a mistake?" Well, if you're not comfortable with the downside, if you haven't considered it, don't take the trade. And if I don't consider the downside before the upside, I don't take the trade. I have to be comfortable with the downside. So usually when all-time highs are being broken, when new levels are being broken, it's just continuously all over the news, you want to do the opposite of that. You want to wait. And this is personally has helped me ensure that I'm not chasing moves and I'm not acquiring it at the wrong price. And this goes back to the concept of, getting a discount. You want to get a discount on the market, whatever instrument it is. You don't want to go buy a brand new vehicle from the dealership unless you're willing to take that 20% hit when it goes off the lot. And if you're not prepared for that, you haven't made a decision with considering that factor on the downside. Same thing with stocks. I want to get in on a pullback. I want to go in when it's made its new higher levels and maybe pulled back to 100,000. So, for example, I wanted to zoom out here. If we look at the weekly chart here of Bitcoin, we're seeing a couple things. Right off the bat, obviously, we see this sort of breakout level around 70,000, give or take. You know, it's pretty clear that a lot of folks were looking at this level, and this is a pattern you want to look for. Would you see this as the same type of pattern as what you saw around 70,000? I would say definitely not, right? This has to either go higher and take a break. Once it takes a break, maybe around 90,000, 100,000, it's holding those levels. You're noticing that others are talking about, hey, look, there might be another move up for Bitcoin. There's still hope, etc. You start hearing these narratives of hope, and not in the sense that, oh, it's going to go higher, but more like people are still confident in the instrument. You know, you can consider that as possible reasons to add to your technical analysis and maybe look at buying at 100,000. But right now, on a weekly chart, it's up 1, 2, 3, 4, 5, 6 bars up. And when I'm trading, I typically, if I'm at 3 to 4 bars, unless I have a strategy to scale out and I've already entered at a good price around 70,000 in this example, I'm looking to take my profits. I'm looking to take out at least 70% of my position because I want to lock in gains. There's a very high likelihood that there might be a pullback. We're also seeing at this level that there's a top doji here. This indicates sellers, right? And if we don't get the same continuation moving forward, we might just pull back. So getting at the right price is super important, whichever instrument you're looking at. And with Bitcoin, I'm personally, the Bitcoin that I have, it's more of a store of value long term. I'm not trading it. I'm holding it for the long term. And it's such a small portion of my personal portfolio. It's probably less than 2%, because at the end of the day, it's something that I don't fully understand, but I'm still willing to put a little bit of money on the table. And I'm more interested in trading this. I've actually been considering myself like, hey, look, crypto is creating a lot of volatility. There's a lot of options out there. There's a lot of ways to access this. A lot of these tools are getting better. I'm interested in trading it. I'm not really too interested in making like a short-term gain, although there's a lot of folks that are doing that. But be careful with the hype. I mean, this is a long commentary on this, but with Bitcoin, with Ethereum, with Solana, you know, hold it for the long term. Make sure you get a good price. Make sure it's trending up. I mean, I think, James, you were showing the chart of, was it Ripple?
Ethereum?
One of the charts was not performing well. I think it was Ripple.
I mean, Ethereum is not doing well on, even Ripple's not doing well. But Ethereum's not doing well on a monthly chart. Not so sure about the annual, but yeah, I mean, overall, it seems like the market's like too hyped up. Another reason I don't like the crypto markets specifically is because a lot of these big players have vested interests. So Donald Trump's got his own crypto thing going on with his son, and that kind of gives me, you know, an idea of, okay, he's going to go long on this particular instrument. He wants this instrument to succeed because he's putting money into it. And because of this, I mean, there'll be a lot of policies that kind of, and this is what I feel, it's not happened yet, but there'll be a lot of policies that promote Bitcoins and other cryptocurrencies. But again, there's no fundamentals to it. It's just speculations. And that kind of, bothers me as a long-term investor to kind of put the money on the table.
Yeah, for sure. I agree with you. And I think that technical analysis is something that I would recommend to everybody.
Yeah, on this particular, for sure. I'll go all technicals.
And you know what's interesting? We can even break down this chart for those that are watching. For example, let's look at Ethereum USD, right? It's around $4,000. Obviously, when I start looking at a chart, whether it's a daily, weekly, monthly, I want to note down critical levels. So right off the bat, we can see 4,096-ish. You know, we can jot this down. We can look at this level of support here around 2,250, maybe 2,100-ish. Okay. And if you really want to get a little bit more granular, you can take around this $3,500 level. Notice how these levels are fairly, whole number friendly, and they're around the 4,000 level, 3,500 level, $2,000 level. One thing that's really important is these critical levels or whole numbers or psychological numbers. They're levels that others are looking at that have never even seen a candlestick chart. There are those that trade candlestick charts. There are those that are looking at the technology behind these cryptocurrencies, the utilization of these cryptocurrencies. But these psych levels, they amalgamate human behavior. And that's why looking at these charts is super important. If I'm looking at this for myself or Ethereum, I'm noticing right now that from this $2,000 level, it's made 100% move all the way to 4,000, right? That's basically 100% return, right? For anyone that got in right here, that's 100% on their money, right? That's pretty good between September to December. That's a pretty good return, especially if you got a sizable portfolio in that. But this is not the time to buy. I would not touch this right now. In fact, if I was looking at shorting it, this would be a good time to short because it's right against resistance. And it's not made a 30% move. It's not made a 40% move, not even a 60%, 100% move all the way to the top resistance level. This is what support and resistance is all about. So this is more likely to start moving down from this 4,000 level. In fact, what you're seeing here is 1, 2, 3, 4, 5, 6 bars up. It's time to sell, and it's what we might see. Of course, it might go higher. I'm looking at probabilities. This is more likely to start pulling back. Now, this level here I drew because if I want to get a little granular around 3,500, this was a resistance level because it once went here and went all the way down. It was a resistance once again because it was trying to make a way higher. It broke this level, and now this resistance has become support. So I would be interested from a technical standpoint to see Ethereum test this 3,500 level. If it decides to hold, and if the moving averages start to come a little bit closer, that's my signal to buy. But overall right now, for example, from a technical standpoint, if you're just breaking down Ethereum, it's time to wait on the sidelines, see if it wants to hold, If it breaks down, at least you don't feel bad that you took a $4,000 per crypto position, because it could very likely go back down 100%. It's not impossible, but that's why we want to play the game of odds and probabilities and just be patient. Patience pays when it comes to short-term trading. Patience pays when it comes to long-term. And the best thing, I think it was Warren Buffett who said it. He's like, the best thing you can do when it comes to investing is make sure you get a good price. That's all that matters. I think that, was it us? We were covering it last week where he got in at Bank of America Corp at like a supreme price, like an amazing, super beaten down price. And he's made so much money on that since. Like he lives by his standard. He lives by what he preaches. And personally speaking, I'd rather listen to them because they know what they're doing. They don't even know about crypto. They didn't even know probably about all these stocks that they invest in. He has a fundamental analysis, but he knows when he's getting a good deal. And this is so, so important. So I would wait for a lot of these crypto. Let's see another one. Let's look at, Dogecoin. This is so strong, right? This is a weekly chart. It doesn't even make sense to write the technicals here because we clearly broke this $20, 20 cent level. We're hitting 50 cents. People are looking to take profits when they make that 100% return. Some folks might still get in. We might still make it higher, but to the moon, I don't know. I'd rather be more careful because it's gonna pull back eventually, and when it pulls back, I want to be there to get a new entry. For example, if we look here around March 2024, it went up. People thought it was going to go to the moon. People got in right here, and then nope, just took a break. Now here around 10 cents. If you feel like it's going to go up again, it's holding a previous levels around 5 cents. It's now making its way above 10 cents. It's holding, then you can look at it from a technical standpoint and see this breakout happening, right? This technical breakout flag, and then boom. So getting in at the right price is super important. This is where the smart money is, whether they're retail investors or they're institutional. And this is where, they're looking to take advantage of you. Not literally, but they're looking to sell their positions into buyers that are looking to buy purely on FOMO and play it in terms of probabilities. I see this likely to pull back at some point. I want to wait for that pullback. I want to see if it holds. Maybe the moving average starts to move a little bit closer, and boom, that's my entry. Rather than getting in after 6 plus to 10 candles here. This is not what you want to do. I don't care if it goes further. That's the key thing. You can't have that fear of missing out because it could go further, especially with something like Dogecoin. Again, if you're looking at a hold of value too, like long-term, 6 months, 6 years, 10 years, still try to get a good price because you never know that. The phrase that I was actually trying to remember earlier, it just came to mind, the real phrase that I always think about, making money when things are going your direction is super easy. You're super calm. You're feeling euphoria. You got goosebumps. You're like, yes, I'm the man. I know exactly what I'm doing. I got this stuff figured out. That's all easy. But when it's pulling back and you're down 5% on your portfolio, you're down 10%. You were supposed to go buy a Honda Civic and you didn't do that. You bought some crypto. You're down like 30%. That's when you start sweating and the fear kicks in and you start making mistakes and you regret your decision. So might as well get in at the right price. And this applies to any type of trading. You're trading derivatives, you're trading Forex, you're trading futures, you're trading stocks, commodities, whatever it is, Justin Bieber tickets, like anything. Get in at a good price and you will not regret your decision. But more importantly, have an exit strategy if you're looking to trade it. If you're looking to invest in it like I do, I just hold it because I know I got in at a good price and I'm just willing to go through the swings. I'm not really caring too much. It's not a huge part of my portfolio. But if it's something you're willing to put energy in, make sure you have an entry, a stop loss, and a target. And overall, don't bet the whole farm on one horse. I think that's the expression. Yeah, don't bet the whole farm on one horse. But that's it from the technical side. I think that crypto is interesting purely, in my opinion, from a store of value in some sense. If there's people that want to hold it, people that want to transact with it, countries that are allowing it, something which protects the end user comes to play, even if it's a little bit of regulation. People can access it. They have more education behind it. They don't have their crypto going lost somewhere. They don't have these enormous gas fees. And we haven't even talked about the environmental impact. That was one of the reasons why I think Bitcoin back in the day lost a lot of value, was they realized we got to use a bunch of NVIDIA chips. We got to use all these fans. It's using a lot of electricity. Is it even worth it? It's bad on the environment. It's taking a lot more energy. It's less efficient. But I still think that people are interested in it. And for those reasons, I think crypto is something you should watch out for and keep a lookout for, and just try to get in a good price. And if you're trading it, have an exit strategy, because it could always go in your direction, but it could always go against you. And you don't want to be sitting there making rash decisions. It's better to have a plan beforehand.
Thank you for tuning into another episode of Epic Markets Podcast. This is James Invest.
And this is Babar Trades World.
If you like the content, please make sure to hit the subscribe button and see you next week.